Hi guys, Adrienne Green here, and today I have with me Danny Roberts. Thanks for joining me, Danny.
Thank you, Adrian.
And Danny is a client who bought two properties here in 2021. And so he's going to kind of highlight how they went, what the numbers are to help people looking to buy here and, with his experience.
Thanks, Adrian. Appreciate it. I will start off the conversation by saying that you could not ask for a better realtor and investor and partner than Adrian. So thank you for all the help and work that you did with me along the way on my first two investment properties. So these first two deals, one was a C class and one was a B class. The C class was in Eastlake, Chattanooga, and the B class was in Red Bank. Both were 3 bedrooms, 1 bathroom. Both are around 900, just north of 900 square feet, like 950 square feet apiece. Both had a renovation contingent or budget to them. The B class property was about 2/3 the renovation budget of the C class property. The C class property was like 30,000 or so. So I'd call that like a medium value add deal on about $100,000 property. And then the B class property was about 15 or 20,000 or so. The renovations went pretty well, took a little bit longer than expected, but that was not, frankly, unexpected because of just the fact that everybody's very busy in the market. There's a lot of obviously investor interest in the market. Contractors are very tied up and their subs are very tied up, et cetera. So all in all, I was pleased with the overall buy and the price that I got in at. And I was pleased and not unexpectedly so with the renovation budgets that ultimately I ended up partaking in. And at the back end, on the lease side, I ended up getting about a 12% cash on cash return on both of them, which is actually, frankly, north of where I expected I would be because we were able to push up rents a little bit. And I think that was both standing firm on what we thought the northernmost market rents could be, and also that was a little bit of the trend line and the fact that 6 months ago my rents were one thing, and now here 6 months later they're that plus 10%. So.
Yeah, and we definitely see that they continue to go up, and I think it's impressive you got that cash on cash considering you financed those renovations in cash. So you had your down payment on a conventional loan and you had the cash out of pocket from the renovations, and to still be at 12% cash on cash return is fabulous.
Yeah, and we went in on those, I can't remember off the top of my head, but on an all-in basis, they were like around the 1% rule. So if you take your CapEx budget plus your on an all equity in basis, they were around the 1% rule. That's how I initially modeled the deals. So.
And the other thing I would want to highlight here, because we talked about a lot with clients, is your rents were higher than you originally estimated. So your return was better. And so it's like I tell clients again and again, with our initial estimates, we're conservative with our numbers and the trend line is just going up. So if it looks like a single or a double, take it because it's really probably going to be a triple or a home run.
Yeah. I mean, the market is tight in Chattanooga, just like it is everywhere else. But I think in particular in Chattanooga, the rental market is tight. These things the leasing velocity was crazy. The C class one leased in about a week, and then the B class one took like 2.5 weeks or so, which was way less time than I thought in either case. I was expecting that this would take a month or so.
And now when did they hit the rental market? Like what time of year?
The B class one hit the rental market in the worst time of year that you could ask to hit the rental market. It hit in right before Thanksgiving, I believe, and it was leased like right in early December. And then, I was concerned about it, frankly, but it ended up working out. And then the C class one was a little bit earlier. It was in October, so I wasn't as concerned. Although still not an ideal time.
Yeah, not ideal, but still good.
Yeah, and that one ended up, as I said, getting leased in a week or 10 days or something like that.
Yeah, that's great. And then the other thing I would want to highlight, now you are based in Atlanta. Did you talk to people about if you were involved, how hands off you were, how out of town investor you were versus how involved you were?
I mean, overall, from an operations perspective, I'm pretty hands off. I'm not getting into real estate investing and trying to be an active investor insofar as I manage my own properties. I think that works for some people. I think if you want to do that, you obviously have to be close to investments. I am relatively close, but I still am not in this business for that. And so, you know, on the analytical side and like understanding the deals and speaking about them with you, obviously, Adrian, and on understanding the project team that I was going to hire, the property manager, the contractors, I was very involved. I mean, there was nobody else that was involved other than, or, you know, decision making other than myself. But I think as an investor, you also have to realize what your strengths and weaknesses are and when it makes sense for you to relinquish control on certain aspects so you can move on to other aspects such as new deals and things like that. So I think going into the deal, very involved. On the back end here, when we have at least, I'm just kind of hovering over and making sure everything is going relatively according to plan.
And so if you were located even further than 2 hours away, let's say you were like Seattle, California, or, you know, even out of the country, do you think you could have done these deals the same way that you did?
Yeah, absolutely. I mean, I have the added benefit that I am close by. And so I get to, you know, maybe see you this weekend, for example, at one of these events, right? And I get to meet other investors. But I'm looking at other markets as well that are much farther away from here and that I would never drive to. You know, and my fiance, for example, wants to buy investment real estate in Costa Rica, and that is like a real consideration of ours, right? So I think that should not preclude or intimidate anybody. I think as long as you meet the right people and have the right team and build, you know, trusting and working relationships with folks, you can make it happen from wherever you are, whether that be, you know, on the West Coast, East Coast, or anywhere else, and, you know, depending on where you're investing.
Perfect. Thank you. All right. I have one last question for you, Danny. I know that you're continuing to invest in 2022. Is your plan in 2022 to buy properties like either of the ones you've already purchased? Like, is it something you would do again in 2022?
The short answer is absolutely. I have lofty goals that I hope to achieve and plan on doing so. And so going to acquire similar real estate to what was acquired on these two deals. So that's kind of first rule of order, because I see that as relatively low barrier to entry for myself at least. And then longer term or medium term, and just kind of from a more challenging perspective in terms of how to put it together, I also plan on acquiring small apartment buildings to start with, and would like to do that this year as well.
Awesome. Well, thank you so much, Danny, for sharing about your deals. I really appreciate it. And I look forward to helping you find more in 2022.
Thanks, Adrian. Appreciate it.